Well, analysts call the adjustment made by the USDA to the corn ending stocks this month as, quote, minor. Well, however, the market reacted just like it reacted when the same report didn't change soybean ending stocks at all. Extension economist John Michael Riley explained it to Leighton.
Well, John Michael, I understand USDA tightened corn ending stocks. What changed to bring that about?
Well, we saw smaller use at the ethanol level and smaller exports. That was somewhat offset by increased feed use. But at the end of the day, 50 million fewer bushels of corn in the ending stock number. The market was looking for roughly no change, and so that definitely, had a minor impact. Again, 50 million bushels is a drop in the bucket in the big scheme of things when you're talking about a 14 billion bushel crop, a record crop still expected. So overall, I think it was minor changes. Market reacted because markets react to things like that, but for the most part, it was some minor changes. We're seeing fewer miles driven today. We've seen a huge increase in the U.S. the value of the U.S. dollar relative to other currencies, and that's really put some pressure on exports. Both of those were reflected in the report, and also we're seeing cattle being fed a little longer because of the market, and so we're seeing more corn put into feedlots.
And although we talk about, a change there, still U.S. ending stocks still way above what they were a year ago, right?
Oh, yes.
We're not running out of corn by any means.
Right, we're right there, just under the 2 billion bushel mark with our corn ending stocks, which is much a relief in the marketplace. Of course, I guess it depends on what side of the market you're on. As a corn producer, would like to see it maybe a little tighter, but overall, we have a lot more cushion in the market compared to where we have been in recent years.
Now, soybean ending stocks were left unchanged, and that kind of caught the market off guard, right?
That's right. Market participants were looking for a 10 million bushel decrease in ending stock, still sitting there at 385 million bushels soybean ending stock. So again, minor change in the big scheme of things, but overall, this time of year, those minor changes are expected because we know a lot more about what the crop is last year's crop looks like. So these minor changes, but they still have an impact on the market.
All right, we're coming up on that all-important planting intentions report at the end of March. What do you expect the market for beans and corn to do between now and then?
Well, USDA had their Outlook conference at the end of February, and they're calling for smaller soybeans and smaller corn, which I think the soybean number kind of took market participants off guard. Sorry, yeah. Yes. But overall, I think that should be expected. We're looking at a corn to soybean ratio right now of about 2.3. That's probably average. So we really shouldn't see there's not really one leader here in terms of prices dictating acres, but it does look like that right now we're relatively smaller on both fronts as a result of lower prices.